everyone. Today we are presenting a real-time financial data streaming pipeline project. My name is Nitin, along with my teammates Abhishek, Srushti, Ratna, and Divya. Next slide. Let me start by explaining the problem we are solving. In today's financial market, data is generated at an incredible pace. Stock market prices change multiple times per second, and traders need instant insights to make informed decisions. Timing is everything. A few seconds can mean the difference between profit and loss. Traditional batch processing systems, where data is analyzed every few minutes or hours, uh, these delays lead to missed trading opportunities, delayed anomaly detections, and slower response to market changes. Modern financial institutions need systems that can process high volume market data with low latency, detect patterns and anomalies in real time, scale to handle millions of events, and provide actionable insights immediately. Next slide, please. Our project has six clear objectives. First, simulate real-time stock market data for five major tech stocks: Apple, Google, Microsoft, Tesla, and Amazon. Second, achieve less latency with less than 2 seconds end-to-end latency from data generation to visualization. Third, calculate a 5 period moving average in real time, a key indicator traders use to identify trends. Fourth, detect volume spikes exceeding 10 million shares that indicate unusual market activity. Fifth, store time series data efficiency for both real time monitoring and historical analysis. And finally, provide live dashboards with auto refreshing panels for traders and analysts. These objectives mirror production systems at major financial institutions. Now, Abhishek will explain the system architecture of the project.
Uh, Let me walk you guys through the technical architecture of a real-time financial pipeline. As you can see in this diagram, our system follows a streamlined data flow architecture. We start with our stock data producer on the left, which generates realistic market data every 2 seconds. This data flows into Apache Kafka, a message broker, which acts as the central nervous system, receiving all incoming data and making it available for processing. The heart of our system is the Spark streaming processor, which performs three critical operations: calculating moving averages, detecting volume spikes, and processing data in micro batches. The processed data then flows into InfluxDB, our time series database, and finally reaches Grafana for real-time visualization. This architecture mirrors what's used at Goldman Sachs and the New York Stock Exchange, processing billions of transactions daily. Next slide, please. Now let's dive into how we generate the data. Our producer simulates realistic market behavior for five major tech stocks: Apple, Google, Microsoft, Tesla, and Amazon. We use a random walk algorithm where prices move up and down within 2% of the previous value, mimicking actual market volatility. Each stock generates new data every 2 seconds with randomized trading volumes between 1 to 5 million shares. The data is formatted as JSON, containing the stock symbol, current price, volume, and timestamp. This gives us approximately 2.5 messages per second across all stocks, simulating a real market data feed that financial institutions would receive from exchanges. Next slide, please. Now, for the core intelligence of our system, the Spark streaming processor, we are running two key algorithms here in real time. First, our moving average calculations. We maintain a 5 period simple moving average, which means we are tracking the last five prices for each stock. That's a 10-second rolling window. This smooths out price fluctuations and helps identify trends. When the current price crosses above the moving average, it often signals a buying opportunity. When it crosses below, it might be time to sell. We achieve this by maintaining an in-memory store that persists price history across our 2-second micro batches. Second, a volume spike detection algorithm. This monitors trading activity and raises a flag whenever volume exceeds 10 million shares in a single transaction. Why is this important? Volume spikes often indicate major news events, institutional trades, or potential market manipulation. They are early warning signals that something significant is happening with that stock. Both algorithms process data with sub 2-second latency, giving traders near real time insights for decision making. This combination of technical indicators, price trends, and volume anomalies provides a comprehensive view of the market dynamics, similar to what professional traders use on platforms like Bloomberg Terminal. From here on, Srishti will take over.
Hi everyone. Let me walk you through the time series database layer, which is where we store and query all the real-time market data. For our project, we used InfluxDB version 2.7, which is specifically optimized for time series workloads, meaning anything that arrives with timestamps like stock prices. Our data schema uses one measurement called stock prices. We separate information using tags and fields. Tags store categorical information. In our case, the symbols such as Apple for AAPL, Google for GOOGL, and Tesla for TSLA. Fields store the actual numerical value which we analyze, like price, volume, the 5 period moving average, and a volume spike flag. This schema helps keep queries extremely fast since InfluxDB indexes tag which we can fetch stock specific time ranges very efficiently. For example, a 30-minute window for Apple returns in under 500 milliseconds, which is important for real-time dashboards. Another advantage is that InfluxDB handles high frequency data extremely well. Stock data updates every 2 seconds across multiple symbols, and also InfluxDB writes this with minimal overhead. The dashboard is designed for fast decision making. A trader can immediately see when the price crosses above or below the moving average. Signals commonly used in our day trading. We also optimized our queries so that Grafana panels load in under half a second, even while receiving continuous updates. Let me show you the terminal in which we are putting up the real-time stock prices, which we have connected with the final dashboard, where each panel shows us the stock price market spikes. In the first one, the latest stock values, it shows the which is highlighted in red. It shows the active volume spikes. In the right side, volume spikes alerts. We have talked about the exact timestamps when unusual trading activity was detected. You can see other Apple stocks like Apple, Tesla, which were triggered alerts at the time given there. In the middle, we are talking about the price deviation from moving average, which tracks how far each stock is trading from its trends. Or we can also see that there is dramatic spike on the right side around 1400. That shows that the Tesla deviation significantly is moving from its average point. At the bottom, we are talking about the trading volume, where the chart uses color coding: green for Apple, yellow for Amazon, blue for Google, orange for Microsoft, and red for Tesla. Those tall spikes exceeding 20 million shares are our automated anomaly detections in action. Then at the last we have done price versus 5 period moving average, which demonstrates technical analysis, the actual price lines and the smoother moving average lines. When prices cross above the moving average, that's traditionally a buying signal. And real-time stock market prices shows the raw volatile how Google and Microsoft cluster around $4,000, while Apple, Amazon, and Tesla are in different price ranges. Now moving forward with the slides.
Yeah, I'll be talking about our performance achievements. We consistently achieved about 1.5 seconds of end-to-end latency, meaning data moved from the producer through Kafka, Spark, IndexedDB, and finally into Grafana almost instantly. The pipeline also handled throughout smoothly, processing multiple stock updates every second. On top of that, resource usage stayed low, around 2.5 GB of RAM and modest CPU, showing that the architecture is efficient and cloud friendly. Next slide, please. So, to reach that level of performance, we had to solve a few key challenges. One of the biggest was state management in Spark because Spark processes data in micro batches. It doesn't remember previous values on its own, so we had to build a mechanism to maintain the rolling window needed for moving averages. We also had to address service startup issues. Spark often tried to connect to Kafka or IndexedDB before they were ready. Another issue was ensuring all components agreed on data formats since Kafka uses JSON while IndexedDB requires a strict point structure. Finally, we resolved type mismatches in InfluxDB that were causing errors in Grafana panels. And Divya will continue from here.
So I will walk you through the real world applications. Um, First, the algorithmic trading firms can use our moving average signals to trigger automated buy and sell orders. With 1.5-second latency, they are acting on signals before most of the market even sees them. And the risk management teams benefit from the volume spike detection if trading a volume suddenly triples on one of your holdings. That's often a warning sign. It could be a breaking news or institutional activity or something suspicious. So our system catches that immediately. And portfolio managers get real-time visibility instead of waiting for end-of-day reports. They can watch all their positions move and rebalance on the fly. And this same setup works for crypto markets too. It's the same architecture, just a different data feed. It is really flexible. And like firms like Goldman Sachs process over 100 million financial events daily using the same Kafka Spark combination that we have built. It's on a different scale, but the same core technology. And the New York Stock Exchange handles over 300 billion messages daily for the market surveillance. They're watching for unusual patterns and potential manipulation, which is similar to our volume spike detection, but it is just way bigger. And Renaissance Technologies and other quant funds, their algorithmic trading strategies are also built on foundation like ours, streaming data, real-time calculation, and instant signals. Now, Citadel Securities handles about 25% of all US equity volume using real time systems. That's one in four stock trades flowing through architecture like this. And for something more relatable, Robinhood. When you set a price alert saying notify me when Tesla hits 250, that's exactly the kind of real time monitoring our pipeline does. Streaming the data, checking condition, and triggering alerts. Moving on to the next slide. To wrap things up, we have built a complete streaming pipeline that takes stimulated stock data, process it in real time with Spark, stores in InfluxDB, and displays it on live Grafana dashboards. Everything works together end to end. We hit our latency target 1.5 seconds from data generation to dashboard, which is solid for trading applications. And the system is also scalable. We are doing 5 stocks now, but the architecture handles hundreds without major changes. And most importantly, we are not just showing raw numbers, we are delivering actionable insights with moving averages and volume spike alerts that traders can actually use in real life. So that is it from us. Thank you so much for listening.